Hello, this is Patralik and welcome back to Digital Banking. And today we'll be picking up the second initiative to see what digital banking can do for the commercial customers. And in the second initiative, we'll be covering Treasury Management System. Let's go back to our example of GTech manufacturing. GTech manufacturing, as we discussed last time, was doing great. And now they have expanded globally. So now they have operations in US, India, Australia, Canada, and Singapore. So now these are the 5 places where GTech manufacturing is doing business now. As we had seen in the last example, GTech manufacturing is doing great. But end of every month, they are still struggling for cash. So they're not able to make payments to their suppliers in time. They're not able to run their payrolls in time. They're not able to cover their operational expenses. And to the greatest surprise to the business, this is happening when globally GTech manufacturing has enough money. So what is happening is, say for example, in US, they don't have cash. But when it comes to Australia, they have enough cash and it's all overflowing, right? So they have so much cash. In, say, India, they have some money, but not again enough to cover their expenses and whatever needs they have. In Singapore, they're doing good. In, say, Canada, they're doing good. They have enough money. But if you look at India, and if you look at US, they don't have enough money, right? So these are red. These are okay. So, they can cover their expenses. Australia is doing great. So it is like, it is green. It's fully green. But even after this, overall, GTech is having the cash problem. The treasury team is struggling. So what they currently are doing is they have Excel sheets. And in these Excel sheets, they're tracking their cash and their expenses and all those things. Or they have some systems, but each country is using a different system, which is not linked. So ultimately what happens is the treasury team has to manually collate all the data and try to figure out what is happening where, right? So this part is all manual. Like somebody is sending this Excel sheet from here to there, there to there, there to there, and trying to get what is happening where. Now, just looking at this picture, you can understand how messy this whole thing is. It is messy, it is slow, it is error prone. And the treasury team is spending more than half the time or 80% of the time just trying to get all these numbers in one place. And by the time they get all those numbers are already stale, right? So let's see how our treasury management system, the AI-driven treasury management system of our modern digital banking, is going to solve this problem. Our AI-driven treasury management system is going to bring all that thing into a real-time dashboard. So just imagine something like this, where there's a dashboard and all the data is real time here. Australia, Canada, Singapore, right? And what I'll do is I will show how much of cash each of these places has. So in case of US, say they have this much cash. This green bar is showing cash. For India, they have this much of cash. For Australia, they have this much, this much, this much cash. Remember, Australia had a lot of cash, it was overflowing. So, Australia has a lot of cash. Canada has this much cash. Singapore has this much cash. So, all these green bars are showing the cash, and these are the expenses. So while Canada, if you in relative terms, if you look here, it looks like Canada has more than India, but they have this much of expense and they're able to cover that expense. Similarly, Singapore has needs this much money. So these are like expenses, all expenses taken together. Australia has higher expense. India has a lot of expense. All the development centers are here and they have this much need of cash and they have only this much cash in their account. And US again has a lot of expenses, right? So so this is the scenario. Now what happens is our AI driven treasury management system is giving this dashboard, and looking at this dashboard you can figure out how much money you have at each of these locations and how much money you need at each of these locations. Now our AI based treasury management system is not stopping here, not just showing you this data. It is acting as a smart cash manager, and it is using all the good things of the machine learning and AI and all those good things under the hood. And it is making recommendations that, you know, so much of cash is lying here. You can move it to a place where you get better interest rates, or you can move it to a place where you need some money. You're not able to cover your expenses, and it can do that much before that bottleneck is hit. So it's not on the day of payroll when the treasury team starts to worry about where do I get that money from, and if I want to transfer from Australia, it's going to take a week or 10 days or 20 days or whatever that is, right? So the AI system will tell will also give messages like US is going to have some money problem in whatever, say 15 days, and India is going to have money problem in uh, you know 30 days. The payrolls run in 30 days. Here it runs in 15 days. Again, that's not the matter. So basically here it's saying, in 15 days you're going to hit a cash crunch. Here you're good till 30 days. Here there's no cash crunch. There's no cash crunch in any of those places. So what the system will do is it will say that, move money from here to here to cover the expenses, right? and say Singapore, some Singapore bank is offering a good interest rate. So instead of keeping the money here, it can also tell that, move some money here so that you can get a better interest rate, right? Or say, for example, in Canada, for this month it is good enough, but next month Canada is not having any income, and their expenses for the next month, not this month, for the next month is going to be this much, and there will be no cash, right? So either that money has to be moved from there to here as well, or it can suggest that, to cover this expense, get a short-term loan, right? And again, since this is going to happen in 30 plus days next month, so might be 45 days or might be 60 days, you have enough time to negotiate with the bank or any other financial institution and get a good amount of a good interest rate, a lower interest rate. So this treasury management system is going to do all this based on a lot of things, based on the future predictions, based on how your cash inflow is looking like, and it has all that historical data to do all this magic. So it's not just giving you a real-time snapshot view of what is happening where or how your accounts are looking. It will also do all this predictions, and it will give you a lot of insights and also recommendations. So apart from this predictive analytics and staying ahead of any kind of liquidity gaps that the system is predicting and letting you know, it also has an inbuilt scenario planning, right? So if GTEC manufacturing has to make a significant investment, so say for example in India, they want to put another development center or manufacturing center, right? So that is going to, they are needing a lot of money for that, right? So this is the kind of money that is needed as an investment in India, because this is a capital investment that's going to give them a lot of return. They're having one additional manufacturing unit set up. Now, the scenario planner is going to be a sandbox where the treasury team or the CFO team, they go in and they say that, okay, this is an investment of 2 million that we want to make, $2 million, can we do that or not? Or, what is the best way to do that? Now, this tool, since it knows, their financial situation all across the world globally, where how much money is there, how much money is expected next month, in 45 days, 60 days, 90 days, etc., etc. It also knows the trends of how money has been coming in, going out, when there are cash crunches, when the suppliers don't pay or delay payment. Say for example, during Christmas the payments are delayed, right? And there can be other such factors. So since the system knows all that, what it will do is it will take all that as input and then try to fit in this 2 million investment that they want to make in India. And the system will tell you what is the right time to make this investment and where do you get money from, how much loan you should apply in India or how much loan you should get from US, how much money you should be moving from Australia. Should you be doing this in the month of December, or you should be waiting for a quarter and make this investment towards the end of March, right? So it will do all that detailed analysis, it will give you a report, and it will also tell you why it has made all those decisions. So remember my session on explainable AI? So we'll be using that into this, and whenever you're seeing something, whenever you're seeing any kind of recommendation, you have a reasoning attached to that. So you should be comfortable, looking at the report and reading why the AI driven treasury management system has given you that recommendation, so that you are confident. And if you think it's not, you are free to override that and make your own decisions. So this AI driven treasury management system is not just about showing this real time dashboard. It is about optimizing the liquidity, predicting the future needs, making smart financial decisions. And for businesses like GTech manufacturing, it means less stress, more control, better financial outcomes. So, with this AI driven treasury management system, you get all that and you focus on your business and let AI be that maestro managing all your cash flow. That's all for this video. I'll see you again in the third video on digital banking, and I'll come back with another initiative, right? So see you again. Thank you. Bye bye.